All right, folks. Well, welcome to the info session on $4,000 an ounce gold and where does it go from here. But just to be clear, guys, this is going to be a lot more than just a presentation about gold. There's a lot of things going on in the marketplace right now, as I'm sure many of you are aware. We're going to talk about those, and we're going to talk about some of the things you may not be aware of. Some things that have made those sidelines, those page three, four, five in the news that will dramatically affect your investment portfolio. To be clear, this is hosted by The Complete Investor, Gold IQ Group, Wealth IQ, and a lot of you guys are from Bubba Trading, Target Trading. I recognize some of the names in here. Understand something. We are an alliance of companies. We work in together under the Wealth IQ brand. The idea behind it being that we are here for, and Drew, if you can give me that next slide real quick. We are here for education purposes, guys. We are here to teach. Okay. So we are not giving you instructions to run out and buy things or sell things or do that. We're giving you information so that you can make those decisions for yourself. Okay. What we're hoping to do today is, and this is the way I love the way Drew says this, and he says it a lot in the webinars. He says, go out and check this yourself. Okay, so we're going to give you some information today that we want you to go out and check. We want you to look it up, check the information, see what he's talking about, because when you verify it, you're going to realize where we're coming from. Okay, so just a brief intro of who we are, guys. I'm Mikey Z, all right? So I'm Mike Zanetti. I'm 25 years in the financial industry. I'm a former investment banker from one of the largest institutions in the world. I'm a founder, owner, and operator of multiple trading education, financial education, and trading software companies. And I like to say I'm not only the president, I'm also a client. It's not just about the hair club for men, guys. I say that because I am constantly learning in this environment and I'm constantly trying to find information that is new to me, right? So coming from the financial services industry, it's hard to find new information. And one of those people that I regularly get new information from, one of those people that is always on the tip of the spear when it comes to information is Drew Urasek. So Drew is a financial industry professional. It's such a cheesy term. I'm sorry, Drew, but that is such a cheesy
I
term.
didn't write it.
I know, but yeah. So Drew's an investment grade metals analyst for over 10 years. But I think the key with Drew, when you talk to a lot of guys that are in the metals industry, you talk to a lot of guys that are in the financial services industry, they're salesmen and you get salesman information. I think the difference with Drew is you're dealing with an analyst. You're dealing with someone who really dives deep and understands what's going on in the markets. And I think that third line item right there is what makes the difference. You've helped thousands of people safeguard their retirement accounts. Okay. You've done this over and over again. He'll show you his reviews later, guys. But the important thing to understand is you're dealing with an analyst, you're dealing with a strategist, someone who's going to teach you not just what to do now, but how to think going forward. So, Chief Metal Strategist at Gold IQ, Managing Partner at The Complete Investor, and a decorated U.S. Marine with 8 years of service. Drew, thank you so much for being here today.
Thank you so much, Michael, and Wealth IQ Group and its consortium of educators and influencers in the marketplace are absolutely top notch. You always curate the best content for investors to make great decisions with their money, right? And at the end of the day, it's your money, so you're in charge of taking advantage of the information we give you. I always tell people verify everything I go over with you, make sure it's right for you, and then we move forward and support. Today, I have so much content to go over that will impact your financial situation, whether you're in stocks, whether you're in gold, whether you want to look at gold or any other investment out there, cryptocurrency, you name it. This information today will be very valuable for you because it's kind of like the things that are happening behind the scenes that are going to impact the overall markets, not only for now to the rest of the year, but now until the rest of for the rest of this decade. By 2030, a lot is going to change, and it's all starting now. So, why gold goes up, the fundamentals behind why gold goes up is my first kind of content that I'm going to go over. What strong technical support looks like. I know we've had a little bit of movement between a high in January in gold and a low about 2, 3 weeks ago. And I want everyone to understand what good technical support looks like. Now, normally I don't even go over short-term information like this, but it is very important to understand what happened in the last 8 to 12 weeks with gold and why we feel 4,000 an ounce gold could be your last chance before it takes off to next levels. And again, I want you to do your own research, but we're going to show you some really powerful data. And then the Federal Reserve. The Federal Reserve has two mandates. Number one is job creation and job stability. Why? Why is that number one? Because that's how we get our taxes. The people working out there in America pay the taxes the government, is allowed to spend, right? People working and the companies that employ them. That's the number one mandate for the Federal Reserve. Number two is price stability, specifically inflation. And a lot of information's come out in the last couple of weeks on what inflation is doing and what is the Federal Reserve going to do about it. Because with the last bit of news over the last 3 weeks, I feel personally they just guaranteed the price of gold. And we're going to go over that detail. And then buying gold inside your IRA. There's actually two ways to buy gold. You can buy gold tax-free, penalty-free move of any money that you have in a qualifying 401k or IRA and move it into gold. You lose no value. You're just moving from paper to physical assets. I'm going to go over why that's important to know and how gold is not taxed the same as paper assets. You heard me right. I'll go over those details there. And then last but not least, you can also own gold direct. Nobody delivers gold faster, safer, more effectively than I do. At least I don't know of any other company that does this. Gold in your hands in 1 to 2 days. And you can buy coins that are deemed non-reportable by the IRS. I'll go over those details as well. Yep, you heard me right. You can actually own coins that you don't have to tell anybody that you own while you own them. And I, as a dealer, don't have to tell anyone you bought them from me. So I'm going to go over those details. And then we'll do a question and answer. I'm going to pop out real quick because, Michael, you said something. I'm going to pop out of the presentation. I know this messes up the video for later, but I want everyone to go to my website. Anytime you want, you can go to my website and see the reviews I put on there. Now, these are ones that I pulled off the internet and put on my site. So obviously I picked the ones that are on here, but I encourage anybody to type in my name, Drew Urasek, in any search engine, put Drew Urasek Gold, and you will see every review that I've ever had since I've been in the business. I got into gold myself personally in 2010, buying and selling gold contracts at the Chicago Board of Trade, okay, when I worked out of that building. And let me tell you, I learned from the best. I don't know if you know this, but the Chicago Board of Trade is the number one commodities and futures exchange in the world, and I learned from the best of the best. I quickly fell in love with gold. I worked for 2 of the top 3 gold dealers in America before starting my company, and I've helped thousands of people protect tens and tens of millions of dollars with real physical precious metals. And why do I have only 5-star reviews? Because number one, I educate. I never push anyone into any investment. I educate you, let you make the decision with your money. Number two is I support you in whatever that decision is. Michael knows this. I talk to 100 to maybe even 150 investors every single month. And there are some people gold's not right for. And I tell them that, hey, it might not be right for you. And then last but not least, I support you. All of my clients can get a hold of me, not only regular business hours, but my personal clients, I give my cell phone out. You can get a hold of me day or night, and we are a full service dealer. What does that mean? Not only can we get you gold at a better price than probably anyone else out there, we also liquidate top market dollar, usually cashing you out the same day. So no discounts, no penalties, no fees. Now back to the presentation. Oh, and I will try to answer any questions in the chat as I see them. But if I don't get to you, we will have a question and answer at the end. I will also have Michael post my calendar, which will be up to date. If you want to have a no obligation conversation with me, just click the button. It's my live calendar. Pop your name in there. I'll give you a call and we can have a candid conversation about your personal situation. I love helping people out. I love having just casual conversations. If gold is right for you, we move forward. If not, you got some great information. All right, let's get going. The very first thing about gold, I apologize, I went too many slides. The very first thing that you need to know about gold is it's tied to our debt. As our debt increases, gold goes up. You can overlay since 1971, since we came off the gold standard, okay? 1933 was when we first detached, but we still tracked our money based on the gold that we had at Fort Knox, right? That completely got decoupled in 1971. If you overlay our national debt from 1971 to today, gold prices have always stayed above that. Why? Because our dollar is just a promise to pay back our bills based on our profitability as a country and our ability to pay back that debt. And every time we borrow money, the chance of default goes up, not down. So that's the number one thing everyone needs to understand on this call, that gold goes up with our debt. Now, why compared to everyone else's debt? Because our country is the linchpin that holds the whole global market in play. If we go under, everyone goes under. Okay. Also, it's just a traditional hedge against inflation because it's a physical asset that doesn't get diluted by debt. It has nothing to do with our debt. It has nothing to do with our country's out of control spending. So, as we increase our costs of living, gold stays ahead of it and always has. It is the true value of money and has been for over 5,000 years. It is a physical asset that's not taxed the same. It has some protection and privacy that we talked about a little bit, and I'm going to go over the details later. And it's got limited quantity. By the way, a lot of people don't know this. You can fit all of the refined gold in the world in 2 Olympic swimming pools. So that scarcity makes it obviously a very valuable asset. Now, I want everyone to see what strong technical support looks like. This is gold since the all-time high going into the end of the year, okay, and going into the beginning of this year. When we went up above this $4,000 level, end of last year, the pullback and bounce, and a lot of people don't understand this technical behavior of pricing. That is support. A price has to be broken through, pulled back, and bounced, not just break through. You need that bounce to be true technical support, okay? Well, we had that bounce again when the war happened, when interest rates were threatened to increase. And I'm going to go over this in detail. We did lots of webinars on this. We pulled back specifically because the Iranian war cut off 20% of the world's oil and oil access. Well, it didn't affect physical gold and people safe. They didn't sell their gold. It affected the futures contract trading in the market between traders. Because if I have a futures account in gold, which I still do, and I traded full time doing it since 2010, okay? If I can make my money in oil because I know the choke point of 20% of our global oil is cut off, I'm going to move my money out of my gold futures account and move it over to oil futures contracts, and I can do it with a click of a button. And that's what's been happening. And by the way, I did webinars on this. You can see oil come up by 3%, gold went down by 3%. And that seesaw happened for 2 months, okay? 3 to 5% up in oil, 3 to 5% down in gold, okay? Now that's leveled off. That's leveled off. You can see, even with these crazy, strikes happening between, Iran and 13, 14 days of back and forth with the U.S. pounding them with missiles and all this military ordnance, gold has stayed strong above 4,000. Okay, keep that in mind. But also interest. Interest rates on short-term treasuries is also a futures contract. And the quick money, because we are expected to raise rates, the Federal Reserve was expected to raise rates 3 times to keep inflation in check. So that also pulled down on short-term gold prices, okay? Now, and again, I did a webinar. You could see the short-term interest rates spike, right? Gold came down almost identical time frames, okay? But 2 things happened in the last 3 weeks that you have to see And the Federal Reserve, I personally believe, guaranteed the price of gold, meaning this is the launch point for the next levels. So I personally believe this is the time to get in. And I bought more gold at 4,000, by the way. Now, let's go back to the slide. And I apologize when I use my little. And by the way, this is proof that it's not AI when I use my little drawing tool. I don't know why it does that. It pops me out of my slideshow. Now, here is gold. And this happened, by the way. This pullback from our all-time highs happened in 2016 going into 2017. Why do I know this intimately? So I got into gold in 2010. My wife took 6 years to get into gold, telling her every day, you got to get gold, you got to get gold, you got to get gold, you got to get gold. She finally pulls the trigger. And here's the end of 2016. I won't use my drawing tool. Just look at the bottom left-hand corner of the screen, and you can see gold was on a tear at the end of 2016, going from about 1,100 to 1,300 at the end of the year. Okay? She finally gets in the end of 2016. What happens the first quarter of 2017? Gold drops by almost 20% in a matter of about 3 months. Well, guess what was happening in 2017, the beginning of 2017? Trump lowered all taxes on businesses, or tons of taxes, got rid of tons of regulations. It was called the reflation trade. He was basically allowing companies to spread their wings and fly so that money was pumping into equities and out of gold, because equities were the hot hand, if you will, right? Also, the Federal Reserve raised short-term interest rates, right? Giving, obviously, traders that are short-term traders in the market a place to put their money and make a quick buck with higher interest rates on short-term rates, right? Kind of sound like right now happening, okay? But look at the overall move in gold. And this is just the last 9 years since the beginning of 2017, right? That's it. And by the way, our inflation is higher than it's ever been, an average of almost 10% a year for 5 years. And Donald Trump, whether you like him or not, is spending money double at the rate he was in his first term. Double. We are expected by 2030 to be near $100 trillion in debt. Now, wait a minute. If gold goes up with our debt, and our debt more than doubles in just 4 years, by the way, less than 4 years, if our debt more than doubles in less than 4 years and gold goes up with our debt, shouldn't gold double? And just look at analysts, what they're saying. And you can back me up on this, Michael, because my numbers are conservative. 8 to 10,000 an ounce in the next 4 years, actually less than 4 years, is what a lot of conservative, and we're talking JP Morgan, Ed Yardeni of Yardeni Research, Goldman Sachs, Bank of America are all saying 10,000 an ounce by 2030 is a low estimate. Now, if you go to Jim Rickards and some of these, I don't want to call them crazy, but they're saying in upwards of $20,000 an ounce. I go with the
And I think
conservative ones. 8 to 10,000 an ounce is my personal target for gold by 2030.
I think I think there's an important thing to point out here, which is it's not just analysts that are pointing that out. It's a lot of companies that are disincentivized to point that out, right? It's financial advisory firms are saying gold's going to do that. Well, guess what? Unless they're buying GLD or some mining stock, they are not incentivized to say that gold is going to go up, right? So they're saying have it as a part of your portfolio. I believe it was Morgan Stanley actually came out, which was shocking because they don't have a gold department, guys, and said $10,000 an ounce. That to me was a true indicator that we're heading into a time where the analysts want to be right, even if it doesn't make them money. And that to me that was a big flag to me when I started seeing companies that have no financial incentive to say that coming out and saying
Oh,
that.
yeah.
So
Yeah. Now, write down these two companies, or funds, if you will. Okay. Well, one company, one fund. Situational awareness and Citadel. Because if I could tell you what to look out for that happened, why the AI trade crashed. And there were people losing 15% or more in a matter of about a week in their portfolios because they were heavily, invested in the AI trade. If I could tell you, oh, by the way, this is something you could see behind the scenes, wouldn't you look for those signals? Well, that's happening in gold. Now, I'm going to tell you what happened with situational awareness. So this kid, 24 years old. Oh, by the way, the reason why I'm really harping on this, remember Marine Corps 8 years? Guess what Marine sergeants go through in non-commissioned officer school? We have a whole segment on situational awareness.
Situational
Okay, first
awareness.
is perceive, right? See what's going on around you. Two is understand how it's affecting your day-to-day operations or your mission, right? And then three is having a contingency plan, right? You have to have, or anticipate is the actual letter in the acronym, right? But it's having a backup to your backup to your backup. And I think I told this during our wealth expo in June. I think you remember me telling you this. So
Yeah.
the job of a sergeant, especially in the Marine Corps, and I'm sure it's that way in the Army and especially in special operations units. So you got the lieutenant and you got the captain building the plan, and they come, and it's not that the sergeant says, no, I can't do it. As a matter of fact, in the Marine Corps, we always say you can do it. But our job is to make sure that we have all of the contingencies in play so that if the oh crap factor happens, we have a backup plan and we have a backup to our backup and then a backup. And again, this is all based around situational awareness. And this kid had no backup, which is so ironic that the name of his company is situational awareness, because that's one of the three tenets of situational awareness, right? Is having the backup. So what he did was he took his fund and he grew it. He was given like a bunch of money from his investors, and he grew it by throwing all his money in the AI trade. And the AI trade obviously pumped up his returns. And he took that money and leveraged. He basically borrowed money to put more positions on and put more positions on, up to the point where he's 400 to 500% and more leverage based on the money he had in the account. Well, Citadel can see all the positions and can see he has no protection. What do? They use an old quant strategy where they load the order ladder. What does that mean? They basically sell off their trades on the exact same stocks that he owns in his fund, but they put them in increments that grow and get lower in the price ladder, forcing the market down. And to cover their losses, because they're basically selling at a loss at some point, they short the market, right? And that is, if you don't understand it, I have to meet with you one-on-one to go into detail, because that's a little bit of a sophisticated trade where you short the market, but that allows the fund to make money while it goes down. But what it does is it signals all the investors in the market to sell off and short the market when it's done in volume, right? And Citadel, you look up Citadel, it's one of the biggest players out there. And what that allowed Citadel to do is not only drive this guy down, but also hit all of his circuit breakers to close out his account for losses. And they swept in and bought his fund for pennies on the dollar, getting all their customers for almost nothing. So not only not having situational awareness screwed this guy, right? But that's what's happening in gold. So I'm going to give you the situational awareness right now in gold. Perceive, number one. Okay, understand what's the impact on you. And last, have your contingency, right? Anticipate. That's what the acronym, anticipate. Have your contingency plans, okay? So the Federal Reserve is guaranteeing the price of gold, in my opinion, you check out yourself. Why? They have two mandates. What's the first mandate? I brought it up. Jobs. Why? Because that's how we get our revenue. Well, July 2nd, we had the worst jobs report that we've had since probably 2020. Not only did we not add 115,000 jobs, which we thought we would, it was a third of what we thought, 57,000 jobs. That's anemic. And then we downgraded every jobs report except for one since Trump been in office. Oh, and 700,000 people gave up and stopped looking for work. They just got out of the workforce. 700,000 people just said, you know what? I can't find anything. See you later. Bye. That was so bad that, look, I'll show you what happened to gold that day. That a lot of analysts are saying the Fed can't raise interest rates. They were expected to keep this out of control inflation in check. They had to raise interest rates, and the market priced in 3 rate hikes by the end of the year at the time of this printing. Okay. The jobs report July 2nd. Okay. Oh, by the way, ready for this? The jobs report for the last 2 years is a joke. The last year that Biden was president, they revised down his entire last year of jobs by 818,000, erasing all job growth in America for one full year. I just hope you guys see this, because if we don't have employees, well, number one, I think we're going to have civil unrest, right? But number two is we don't have income, right? Idle minds is the devil's playground, right? You know that, right? People like to burn buildings and storm, public facilities when they don't have a job and nothing better to do, right? Except for complain they have no money. But we also don't have income as a country. So we bring in right now $4 trillion in taxable income as a country. That's all revenue sources. We not only spend all of that, we spend another $2 trillion negative, and that's as of last year's numbers. So we deficit spend $2 trillion. Well, if we're lowering our income at this drastic rate, how can the Federal Reserve raise interest rates? It will cut off even more jobs because they're making it more expensive for companies to operate. So keep this in mind. Oh, by the way, here's gold. Look at gold. This is the announcement time. This is when the jobs report came out. And look at gold. Jump 2% in a matter of a second. So again, situational awareness. What's going on? How's this impacting me? Right? What do I do with this information? Right? Me, I say get into gold if you're not in gold. All right. But I'm biased. And again, you can do your own homework. Now, and again, it not only rose, but it rose up drastically the next few hours. Okay. It did pull back a little bit. But again, what happened on that news? It's saying, hey, the Fed can't raise rates. They can't raise rates. They're going to kill jobs. Okay. Now, we also had the CPI report. This is just 2 weeks ago, less than 2 weeks ago. All right. And the Federal Reserve spoke in front of Congress about this specific report. And automatically, out of the blue, all of our CPI numbers look great. Oh, just imagine all of our numbers and our inflation numbers just magically look better than normal, right? Oh, the headline CPI is better than expected. Core CPI better than expected. And by the way, this is the biggest joke. If you didn't know this, look at all the things that are not included in the inflation reports the Federal Reserve uses to manage our interest rates. Number one, housing insurance costs. Not in there. Healthcare and childcare, auto repairs, groceries, property taxes, gasoline for your car. Listen, this is so. What do you think the number one cost in America households was? What was the biggest increase in the last 3 years? Insurance, homeowner and auto, up 30% a year for the last 2 years. That's insane. Then again, healthcare costs, unbelievable, just absolute, just mind boggling. And again, we've been overall averaging about 10% a year inflation for the last 5 years. It's out of control. And the Federal Reserve is saying, oh, I don't have to raise interest rates because inflation's in check. But these numbers are so fake, in my opinion. Again, do your own research. But look what happens when the Federal Reserve just is hinted they can't raise interest rates. Here's the news. This is the actual, when they announced that the CPI and all the inflation numbers look great. Inflation's in check and gold jumps 2% on that news. This is just, what, 14 days ago, 2 full weeks ago, okay? Now, this, again, the Federal Reserve, so you can look this up. was expected to raise interest rates 3 times by the end of the year. And they just kept rates the same yesterday. They had their Federal Reserve meeting and they kept rates the same. This is what I need you to see. Here is the announcement. Oh, this is Trump's trade. What do I mean by that? Trump told all his buddies right here, because this is before the announcement. And here's the announcement. This is the actual announcement time.
Told all his buddies. I like that.
And it jumps, because here's the actual time he told the announcement, and it jumps again almost 2 full%, right? And the reason why I'm focusing on these numbers is I don't normally look at the gold trade for short term. I'm a 3 to 5 years out minimum. And again, gold by 2030 easily, in my opinion, could be 8,000, 10,000 an ounce just based on our debt, because gold goes up with our debt. But if you want to know this technical, what's happening with gold and why did it pull back and why has it been hovering around this $4,000 level, it's because it's being tested. And it is not only being tested, I think it's being guaranteed. This is the launching point. And look at the tea leaves. Every time the Fed speaks, and based on the inflation numbers and their inability to raise rates into inflation, puts them on par with the most dangerous situations in the world. Look at Tokyo. They have always gone into inflation and lowered interest rates because they can't do anything else. And look at how hyperinflation hits Tokyo and the yen. Okay, Turkey notoriously lowers interest rates into inflation, and their inflation is insane. Look up Venezuela, Argentina, Brazil. All these countries can't lower rates because they're in a debt spiral, and some of them defaulting on their debt. And look what's happening. I mean, in Venezuela, if you had $1 million and put it into gold, you'd be at $4 or $5 million in value if you did it in 2016. If you kept it in the Venezuelan dollar, $1 million would be worth less than 1,000. That's how bad inflation gets when you can't raise interest rates to control it. And look at what's happened when we're showing that the Fed can't raise interest rates. Now, we could raise interest rates, but I don't think it's going to be 3 times. Heck, I don't even think it's going to be 2 times. I personally believe, this is just me, I don't think they'll be able to raise rates at all. Now, this is what I want to show you. So he didn't raise rates, and everyone says, no, they'll still raise rates. But the chance of raising rates, Reuters, I put it in here. Did it make it in here? The Reuters article? You can look it up if it's not here. The Reuters
It's up at the top.
article. Oh, here's. Yeah, Reuters, you can look it up. Reuters went from an 81% chance of raising interest rates by the end of the year down to 65% as soon as he started talking. And by the way, that's one time. And just 3 weeks ago, the market was expecting him to do 3 times. So again, he might, let's see. But again, let's look back at 2016, because the same thing happened. We have out of control debt. Gold goes up with our debt. We might have this short-term play where gold takes a little dip. But overall, to me, that's the only true protection against our debt and our country's out of control spending, okay? And this out of control inflation that we're experiencing. Now, 2 ways to get gold. 2 ways to get gold, and I'll have a question and answer session. And then Michael, obviously, if I missed anything, please chime in. But the number one way to get money into gold is using any money that you have in a qualifying 401k or IRA. Most people don't know you can move it into physical assets, tax-free, penalty-free. It takes 10 minutes to open up your account and move your paper into physical assets with no discounts, no penalties, no fees. Why might you want to do that? Again, nearing $40 trillion in debt, possibly doubling that by the end of 2030, right? Gold doubling because of that. Also, physical precious metals are not taxed the same as paper assets, not taxed the same as stocks, bonds, mutual funds, annuities, even cryptocurrency. And I'm sure in retirement, everyone on this call probably rather spend less in taxes than more in taxes. Am I right? Now, also, we deliver gold direct. You can take any money that you have in cash and convert it into gold. And I don't know of, and Michael, you've seen me deliver gold in one day. I don't know if any other company delivers gold faster, safer, more effectively than us.
Never seen
Gold
it
in your
before.
hands in 1 to 2 days, fully insured. I've heard of companies, especially when the gold was going like, straight up, right? Last year, 75%, da, da, da. People were quoting 8, 12 weeks to get their gold. Even today, there's some companies that still quote multiple weeks to get your gold. 1 to 2 days in your hands. And again, you can own coins that are deemed non-reportable. What does that mean? Now, I'm not your accountant. I am not your lawyer. I'm not trying to tell you how to do your taxes, right? But you can actually own coins. You can look up the IRS code, 1099B guidelines for non-reportable coins. You can actually own coins that you do not have to tell anybody that you own while you have them. And me as a dealer, I don't have to tell anybody that you bought them from me. And there's no other investment, in my opinion, that exists like this, where you can actually own something that nobody has to know you have. I mean, everyone knows what house you have, right? How much you owe on it, what's your interest rate? How many times have you got a text, "Hey, lower your interest rate," right? Or get a HELOC, right? It's because they bought your data, right? They can see how much you owe, they can see your interest rate, they can see your equity in your house, right? Same thing with financial advisors. Michael, you already know this, right? Financial advisors can buy what account you have, how much money you have in your account, and there's some places you can buy the actual positions of stock you have, right? So they can
Yep.
guesstimate the calculation of your returns. That's why you get text messages sometimes say, "I can get this return," because they think that you are getting less than that, right? So again, it's nice to have an investment that nobody has to know you have, in my opinion. All right. This is obviously the end of our call. I would love to meet with you, go over your personal situation. I'll have Michael put my calendar link in the chat. This is live and up to date right now. You can click this link, get on my calendar. It's updated right now by the second. So 100 people could sign up for an appointment. If you see it, it's open, take it. You and I can have a casual conversation about your personal situation, answer any questions you have. Again, gold might be right for you, gold might not be right for you, but I am going to show you what exactly gold is about. Again, all the features, benefits, tax differences, which is huge for a lot of people, right? Any questions? I'll open it up. And then, Michael, if you got any comments that I missed or.
Honestly, I think the best thing, I love listening to you, first of all. And I think you went through some really important information today. But guys, if this is the kind of topics that you enjoy, if you'd like to learn more, if you've got questions about your own situation, Drew is one of those gurus who makes himself available. I can't tell you that will always be that way. He gets busier and busier. Take advantage of it while he's there. I will tell you, Drew and I do this once a week, once every other week. Every single time I learn something new, I'm sitting here in the middle of the webinar, and he was talking before about something, and I'm looking it up. I'm looking it up myself. I encourage you to do the same thing. Have the conversations with him. I I don't know how long he'll be available that way. All right, so take advantage of it. It's no
I live and breathe
obligation.
this. I don't see a time when you wouldn't be able to get a hold of me.
Well, it's no obligation, guys. There's no you don't have to buy anything, you don't have to do anything. Just get on his calendar, have a conversation with him. I think you'll really enjoy it. I know that I do. And Drew, always thank you so much for spending the time and talking and guys, take advantage of it. Do it if you can. All right?
Yes, thank you so much. And again, the link is in the chat to get on my calendar. Thank you so much, Michael, for having me. Great, always, as usual.
Thanks, guys. Have a great day.